Hi everyone, welcome back to Be Rich. This was originally supposed to be my podcast for the day, but unfortunately, being a father, I had too many things happening in the morning with my kids, which I was committed to, so I couldn't get out of it. Nor could I record the podcast. And Shashwat was busy in college, Anand's busy with work, so I thought I'd just talk to you guys straight, turn the camera on, and talk to you from my notes on what I actually want to talk in the podcast as a video today. So good evening and welcome back to Be Rich. Today I want to talk about Walter Schloss. Walter Schloss is one of the noted students of Benjamin Graham. He's known as the father of value. Benjamin Graham is known as the father of value investing. The guy was a teacher in Columbia University College, and that's where many of the noted students have come from. And all of these guys have become value investors after being influenced by Benjamin Graham, and Walter Schloss is one of them. What is his strategy? Primary strategy is price. Schloss was a firm believer in buying stocks that were traded in discount to their intrinsic value. He often said, "We buy cheap stocks." This is a common thread which you'll see through all value investors, including Charlie Munger, Warren Buffett. We spoke about Seth the other day, Benjamin Graham, all of them. If you're a value investor, the basic thing what you look for is the intrinsic value, which is the innate value of the company, the stock. We try and find a share price which is trading at a lower price than that. That means the market thinks the company doesn't deserve to be traded at the price where it is, so it's trading at a price far lower than that. We've seen this in many shares and companies in India itself, in our Nifty and BSE stock. For example, if you look at ITC, why Anand was going hammer and tongs for more than 2 years from the middle of the pandemic till now is because ITC was trading below its intrinsic value. The way he was going about any of the banks like South Indian Bank, which is trading below book value, is for the same reason. Why was he talking about IndusInd Bank way back? Not anymore, because the price has gone up, or it's because of the same reason. Because there are companies, believe it or not, very big companies which are in Indian market, which are trading below its intrinsic value, because for some weird reason, market being, like Seth says, a manic depressive patient, seems to think it doesn't deserve the price it deserves. So we as investors should notice this and move in. That's what Walter says. The other thing he says is avoid prediction. Schloss did not try to predict the economy's direction or the stock market's next move. Instead, he would focus on what he could understand, which was the value of a specific stock. This is another thing which we have been driving home to you guys, which is research. I did a video with Kesav yesterday about banana speeds, why banana speeds should not be bought. Even though if you look at it the surface, if you just look at the ratios, it might look interesting. But the deeper you dive into the company and get into the balance sheet and see the ownership structure, it doesn't bode well. So this is what he's talking about. He says, don't go by what market gurus are saying. Don't go by what Anand is saying or I am saying or anybody else is saying. Do your own research. Listen to us. You might find some inspiration, but based on the inspiration we give you, you have to do your homework. You have to deep dive into that stock. Read the balance sheet. See the numbers. See if the numbers are making sense. See the nature of the business. Is it making sense? This is what's very important. And when we're talking about balance sheet, Schloss says, put a significant emphasis on balance sheet rather than earnings or profit loss statements. He liked stocks with low debt and preferred companies with a strong net working capital, current asset minus total liabilities. So this is another important thing. Why balance sheet is so important than profit and loss and earnings. Because if you're a value investor, your bread and butter is the balance sheet. The balance sheet, especially of a long-running company which has been active for more than 5 to 10 years, you should look at the history of the balance sheet. Nowadays, thanks to the internet and the way the world is working nowadays, you can pull up any company's balance sheet online and start reading it immediately. You can go to BSE. BSE's website has all the balance sheet. Like Kesa was struggling to find Banaras Beads balance sheet because their website was down and looked very suspicious. That itself to start, they couldn't get their website up and running. No problem. We walked into BSE's website and we have managed to pull down the balance sheet and look at the balance sheet. So this is why it's important to look at the balance sheet, because it gives you a complete history financially and business wise what the company has been doing periodically year after year, and it's published and it's independently audited and it's out there. So as an investor, you can see where the money has come, where the money is going, how are they doing their business, what kind of assets are they growing, what kind of inventories are they going, who are their customers, what is the future plan, and from year on year, did they expand on those plans, did they do those things? Then like what Keshav said in Banaras Beads, they claimed a lot of things during the IPO. Did they follow through in it? This is the main reason why Anand says don't buy IPOs, because there is no transparency in it. But once you're a trading company and you're in the market, your reports are published and it's public information, so you cannot hide it anymore and it's very clear what is happening. So this is why I say do balance sheet analysis. It's not hard to learn. It is not a complicated thing and do balance sheet analysis. This is the fourth one, is something which is different for Schloss, because Walter was different in this aspect compared to Charlie Munger or Warren Buffett or even Seth. What he said was diversify. Like many value investors who take large positions in a few companies, Schloss held a diverse portfolio, often owning over 100 stocks that were partly because he admitted that he didn't know which cheap stock would go up the most, so he bought a lot of them. So what he would do is what Anand said not to do, but he believed in this philosophy. This is why I always say, don't have to follow what we say. Not our road is not the only road which will lead you to Rome. You can take any road and all of them will lead you to Rome as long as you stick to the journey. What Schloss believed in was, he believed in having a very diverse portfolio and placing bets in different companies after analyzing it, because he said, I could not predict, or there's no way I could know which company was going to go up. So by placing small bets in various companies and doing it periodically, he grew a huge portfolio. This may work for you, this may not work for you, I do not know. But me and Anand do not preach this, and we do not follow this for the simple reason, we do not have the capacity to analyze 100 companies and keep a track of 100 companies in our portfolio and keep a news and keep an eye on it and keep it going. During the time of Walter Schloss, things were very different. Things moved very slowly, news cycles were much slower, and tracking information was much easier. In today's day and age, with the internet and the way the social media is and global economics are, keeping a track of 100 companies can be very, very difficult. So I wouldn't advise it. Times have changed, so I wouldn't advise you to do this. But it does work. Long-term perspective. Schloss always believed in holding stocks for a long term and was known to be patient, waiting for the market to recognize a stock's true value. This even Fisher has said, that doesn't matter if the market corrects or if the manic depressive market Mr. Market decides to dump the stock. If you believe in the company, you believe in the business, and you believe in the management, you should hold on to it and wait for those returns to come, because the returns will come. If your business is sound, your company is sound, and your investment is sound, the returns will come, and you have to learn to be patient. Patience is the most crucial thing in being a value investor. Nothing else gives you rewards like patience. So remember this. Another thing which Schloss used to do was he would avoid popular stocks. He typically avoided popular stocks in the news. Instead, he sought for unloved, ignored, and overlooked companies. Anand has also spoken about this a lot. Do not do fad stocks. Just because it's Reliance and Ambani's are making the news, or Adani is making the news, is not what you should go after. You should look at the stock index in the BSE. BSE has over 5,000 stocks listed. Go through them. I'm sure there are lots of gems and cigarette butts, as Benjamin Graham would say, cigar butts lying there for you to find. It just takes you time and patience to patiently take the list, take sector by sector, and start looking at the numbers. There are many magazines and books and websites out there which list all these stock companies with their key ratios in a nice tabulated column, which you can run through immediately and start picking the companies to analyze further. By looking at overview of the few ratios, you can decide, okay, this company looks interesting. Let me dive down and see what more does it have to offer. This is what I strongly suggest you do. Instead of following popular few stocks and running behind them, try to find these small gems in the Indian market. Then, what he always has said is, and his son also who worked with him believed in, was meticulous doing your own research. That means don't rely on my research or Anand's research or Albin's research into us telling you what we found in the balance sheet. We will tell you what we found, but then you should take the balance sheet and you should read it yourself and see if what we say correlates to what you also find in the balance sheet. This is important. I know a lot of us feel lazy to do this and we want to be spoon-fed. Even I like to be spoon-fed. I liked having my brother tell me all the time what to do, but he strongly discourages this and he refuses to do this to me all the time. That is how I've been able to grow step by step a little bit in my knowledge and in my understanding of stock market, because his refusal to spoon feed me. This is the main reason why Anand always says, I have nothing to say about when people ask him, what should I buy? He's like, I don't know. And they ask him some random company and they say, what do you think about this company? He'll say, I don't know, because he doesn't like spoon feeding. He rather that you do the struggle, and you can ask him numbers. You can ask him, definitely. I reach out to him and I say, this is what I read in the balance sheet. What do you think about these kind of numbers? Does it make sense? He'll definitely be happy to offer an opinion on it. But if I go ask him, is this a good buy? He'll say, I don't know. So he expects you to do your own research. And most importantly, keep it simple. Schloss did not visit companies. He did not meet the management. He believed everything you need to know about the company could be found in his financial statements. This holds true for us also here. All of us are not huge hedge fund managers, nor are we huge private equity owners where we can go knock on the door of a medium cap or a small cap company or a Bindo Pharma and ask him, give me a meeting. I would like to know a few more details about your company before I buy 2 shares. You can't go do that. He's not going to entertain you. So it is true. Most of the information which you seek as an investor is available in the financial statement. By reading the balance sheet, it is there, the vision of the company, the history of the company, who started it, where it plans to go, it's all there. All it requires is some patient reading and you have the information at hand. And not all balance sheets are like Infosys, as KSF says, running into thousands of pages. Most balance sheets and annual reports are maximum are 60 to 70 pages, which you can read over your breakfast or your dinner. I'm sure it's not that difficult. And if you do find difficulty in understanding anything in the balance sheet, please do reach out to me on Instagram or messages down below. I'm sure our team, when they're looking at it, they'll be more than happy to try to message you privately and clarify these doubts you may have. This is a very important thing, which I've been stating over and over again in this video, which is making decisions based on your own research rather than being influenced by other people's opinion. This is the common thread in his investing model, and if you see this repeatedly, I've been saying this, is that you have to learn to be independent. Other people, like how famously my trainer keeps saying, I wish I could come through the video and do the exercise for you, but he can't. All he can do is sit and encourage me. Same way, I wish I can come and do the investment for you and do the research for you. I cannot. You have to do it. But me and Anand are here to encourage you. And Anand has done over 2,000 videos about this, about stock management, about investment, how to grow your wealth, how to become rich. 2,000, a lot of videos. And he's been doing it on multiple mediums and multiple channels. He's been reaching out to you guys. But at the end of the day, you have to do the work. We can't do it for you. So these are the important things about Walter Schloss, which I wanted to keep in mind. And why he is such a great investor. And even Warren Buffett was a great admirer of him. But there are a few things which I wanted to say. Why you're not able to achieve the goals is be so trying to achieve in investment. The main reason is consistency. Consistency is what gets you results. If you're not consistent, it will not give you results. Showing up is the biggest piece of the puzzle. Showing up for your life, showing up for your investment. The most important thing which I want to say is the third thing is don't overcomplicate things. Most people don't get to where they want to go because they spend too much time trying to figure out what to do. Instead, this is my advice. Do something. Do that something in investing. Learn from it. Then iterate the process. Means correct the process, change it, improve it. Then do it all over again, start again. And do this investment once a month. In the beginning of the month, you do it. Then go to your life. Do whatever your life stuff are. Do that and come back in the beginning of the next month and repeat this process. And if you do this repeatedly, trust me, your investment will grow and you will grow in confidence. Most important thing what will happen is if you do this, it will improve your self-confidence and your knowledge of the world and money and economy and investment, and it will make you a better person. And most importantly, a lot of you have always asked me, how much should I invest? How much should I invest? Well, for each person, investment number is different. It's not based on their goal. Like how I say, my trainer says, for each person, the amount of weights you lift or the number of sets you do is different because of your mental makeup, because of your physical makeup. Same way, for each person, the amount of money they should invest is just not a percentage. It's different depending on your financial situation, amount you're earning, where you are in life. But the most important thing I want to tell you is the amount to which you're investing should challenge you. It should not be impossible. I'm not asking you to overreach. I'm not saying take all your money and invest it. Take all your salary and invest it. No, that's not what I'm saying. But I'm saying the percentage of money which you take out of your salary and or your monthly income, if you're a business person, or your quarterly income, whatever you decide to invest, that amount should challenge you. That should bite you. For the simple reason, then only you'll be right at the edge of what you can achieve maximum. Because when you reach at that level where you're almost in a position where you're like, ouch, that investing is hurting me financially, do you realize, okay, you're pushing to your maximum and your returns will also be at the maximum. If you don't push yourself to invest like that, you will forget you're investing. You will not pay attention to it. It'll be like one thing which you're throwing in the corner, like buying some new gizmo or a toy, which you don't pay attention to. That's why your investment should be something that bites you a little bit. So it keeps your attention, it keeps you interested in the game and keeps you going. I hope you guys found this interesting, this video. And as always, thanks for joining me. And do subscribe to this channel and turn on the bell notification icon so you'll be notified every time I come out with something new or when Anand and Shashwat join me here on the channel. Thank you for watching Be Rich today. Bye.
Good evening and welcome back to Be Rich. After the event in Bangalore, my team has decided that we should visit my ex-home, Saudi Arabia. We were there recently but visited only Dammam. The idea is to cover the other two major cities, Riyadh and Jeddah. On the 22nd of September, I'll be holding an event in Riyadh, and on 29th September, we will meet in Jeddah. Those who are desirous of meeting me both in Riyadh and Jeddah should contact the email ID given below and the WhatsApp number. My team would get back to you at the earliest. Once again, thank you for supporting Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.